The BRICS countries say, yeah, we hate the dollar. Their own home currencies are much, much worse than the US dollar. There's a market outside the United States that is denominated in dollars. This is China trading with the Philippines, Japan trading with Thailand, Turkey trading with France. Loans, invoices, trade deals take place in dollars. There's a huge amount of US dollar debt that is owed by entities outside the United States. They don't owe it to the United States. They owe it to themselves. Over $30 trillion. The BIS says off balance sheet, it's closer to 80 trillion. It's Turkey owing it to France, owing it to South Africa. To de-dollarize, they would also have to deleverage all that US dollar debt. De-dollarization is the equivalent of deleveraging. The underlying price of the currency that is being deleveraged rises versus the goods and services. If the rest of the world were to default on all this US dollar debt, it would also mean the rest of the world is losing 30 trillion in assets. In a debt-based system, one person's liability is another person's assets. The rest of the world would have to all agree at the same time what would be replacing that US dollar credit. And then they would have to all implement it at the same time. And then somebody would have to enforce it and operate it. I don't think the US would sit back and just let it happen.
All right, so a lot of people. Oh man, what are we doing here? Okay, I got that. Sorry about that. So a lot of people believe in this BRICS thing, right? And I want to debunk it. For now, just give you a different thing, something else to think about, right? Another way to think about this whole BRICS destroying the U.S. dollar, and we're gonna go through this, right? And I got it here on my Twitter if you want to read through it. And this is actually from Santiago Capital, right? Um, and he's been talking about the dollar milkshake theory, if you're familiar with it. And I'm just going to break it down real quick why BRICS cannot take down the US dollar. Well, this just ain't going to happen anytime soon. And there's a more likely other outcome. There's a different outcome here. So, first, right, 80% of global debt is denominated in dollars. So what does that mean? Most people they owe dollars at the end of the day, right? Most countries in the world, they're going to owe dollars. That is the system they're in. Yes, they can be sanctioned and they don't like it, but they still owe dollar debts. There's an estimated outside of the US, it's called the euro dollar system, and there's an estimated 30 to 80 trillion dollars of basically euro dollar debt. And that is not due to the US, that is due to each other. Those are people in other countries who actually who are trading with each other and who owe debts to each other in dollars, right? They owe each other debts in dollars. So that's one way to think about it, is there's a whole lot of dollar debt out there. So the dollar, does it go lower? Not exactly, right? If you default, right? So now think about this. Okay, let's say they don't pay the dollar back. They don't pay the dollars. Well, if you do default, that makes the dollar go higher, because what you do is you erase, basically make the dollar more scarce, because you're not going to pay the dollars. You're not going to come and pay your actual debt. So what you do is you remove dollars from the system, you constrain supply, you take away that supply while demand is still pretty high, because most people want to be paid in dollars, right? Most investors want to be paid in dollars anyway. Therefore, the dollar goes higher. So actually, if you do default on your dollar debts, or de-dollarization, you hear, right? Oh, we're going to de-dollarize. De-dollarization is you don't pay your debts back. So the currency that gets defaulted on goes higher. It gets more scarce because nobody pays it back, right? So that actually pushes the dollar higher. And it makes it more valuable versus other currencies, period, right? The BRICS countries can't decide how they're going to actually trade themselves. So that's, that concept is just common sense. I know there's a lot of stuff out there, but just want to bring a different perspective, right? And then you have high rates. So right now, the world, or the global economic system, is really feeling the pressure of high rates. You got high rates, and then growth is obviously slower. Right now, we're in economic slowdown for the globe. Debt interest payments are high, and your debt burdens are actually rising. So, they have to somehow generate more GDP and find a currency, which is not going to happen. You're not going to find a currency, but you have to pay off those dollar debts, which means you have to grow your GDP to some degree to pay off those debts. If you default, well, it goes higher. And if the dollar goes higher, that means your debts go higher because you owe dollars, right? So now your interest payments are even higher. So you get crushed. So really, it's a death spiral. there's not really any way, no easy way out for BRICS. There is a way, but it's not an easy way out, right? The only way out actually is to have a highly productive, efficient, economy with technologies, and hope that GDP outpaces your interest payments, right? So if you're investing in renewable energies, and instead of using, right now we're seeing oil prices spike, oil, instead of using oil as an energy source, let's say you use solar. Let's say that technology comes online. Well, now you're paying a smaller amount of energy costs on a monthly and a yearly basis. So you retain more earnings, or you retain more GDP for your country. Now you can start paying off those debts. So technology is going to come in play here. More efficiencies are the only way out for BRICS, right? They have to invest in renewable energy and whatever it is. That's the only way out for BRICS, really, to increase the productivity of their actual economies, right? So the only way the U.S. dollar actually goes down is if Powell actually cuts rates, which we're looking at here. We might, and we're going to talk about this. The global cycle is starting to turn, and we're going to get to that. But Powell has to cut rates for one. To some degree, he has to cut rates and turn the money printer back on, or start sucking up assets from onto the Fed's balance sheet, right? That's the only way to really get the dollar to really get crushed versus other countries, because they're struggling, they're printing, they debase their currency versus the dollar. Well, the dollar goes higher, and we're seeing that strength right now in the dollar. Oil's going up at the same time. That's usually not the case because oil is priced in dollars, but the fact that other currencies, we're seeing 25% of global central banks are starting to cut rates, right? So that's going to strengthen the dollar. China is printing, so that's going to strengthen the dollar, right? So that's that piece there. Now, I think the more likely outcome here is actually that BRICS is forced, and this might not be for another 5 years, another 2 years, another 3. We'll see how this economic cycle goes, the fourth turning they call it. I think BRICS is actually more likely to adopt Bitcoin, the Bitcoin standard, right? Why? Because right now BRICS' whole reasoning behind crushing the dollar is they're sick of what? They're sick of sanctions. They're sick of the dollar being a weapon. And if you think about the dollar, right, the only thing the US, we're the biggest consumers in the world, right? That's kind of how we keep our GDP going. We consume a lot. We're consuming the world. But what do we export? What do we actually give to the world? There's only one thing we actually produce, and that is dollars, right? That is US dollars. So what do we do if everybody needs the US dollar, right, to actually transact in the world? 80% is global debt, 75 to 80% are global transactions. If you need that, you can weaponize it, right? But with Bitcoin, it is censorship resistance. We might be a ways away from that, but we're starting to see countries switch. We're starting to see countries use it as a legal tender. It's going to come down to the central banks and how they want to use Bitcoin, and we're already seeing we're going to get to that. So why Bitcoin, right? Why would BRICS or other countries who don't want to be sanctioned use Bitcoin? Because it cannot be tampered with or controlled by any central group, right? So there's not really another currency, and Bitcoin's not necessarily currency, but asset that can also layer as a currency. You don't have that anywhere in the world where it cannot be controlled by a central group. That doesn't exist. Not gold. It's not gold either, right? Most central banks hold a lot of gold. So when it comes to Bitcoin, that's a different story, right? So naturally, BRICS will want to choose the money that doesn't constrain their geopolitics, and that's what everybody wants. They don't want it. They want a money that is not tied to politicians or the politics, the geopolitics of the world. They want to use a global currency. It used to be gold back in the day, but it's not the case anymore, right? Because everybody got tricked. You can't do that. You can't tamper with Bitcoin, right? So also, there's no debasement risk. So you can't just debase Bitcoin, right? It only comes out, the supply, first of all, the supply is completely capped, right? There's a completely fixed supply of Bitcoin, so you can't debase it. So that's another reason why they're going to have to hold this asset over time, right? These countries, these nations are going to hold them over time because it's a fixed asset. You can't manipulate it to any degree at all, right? There's no inflation risk either, right? So you don't get national inflation risks. You don't get these big deficits because there's only 21 million Bitcoins, right? There's a fixed supply. It comes out consistently every 10 minutes, a certain amount of Bitcoins. Everybody can see the monetary policy. And for that case, for that fact, you don't get inflation risk, right? There's also no fraud risk, right? There's a lot of fraud risk in the world. The euro dollar market right now, who knows how many of those dollars, like it's almost like a black market for dollars, right? Going on in Europe and Asia, wherever it is. And there's a lot of fraud that can be done there, especially when you have physical dollars, right? Physical dollars or whatever it is. You can't do that with Bitcoin. Can't be copied, replicated, or created out of thin air. Just can't happen. So BRICS will eventually choose the form of money that can be verified, authenticated, and accounted for, which really what it does is it enables cheaper, faster global transactions. That's what everybody wants. Cheaper, faster global transactions, because the business of money is the most the most important business. Now look at the US and say, oh, well, the US has to, sanction Bitcoin. Well, we're headed into an election, right? Where there's a big battle between crypto. Is it legal? Is it not? Are we gonna have are we going to have more crypto investment? Are we going to regulate crypto? Are we going to allow it to exist in the US? And I think that's where we're headed right now. Why? The biggest telltale sign is, the US already has a lot of Bitcoin. Not only that, they're making they're making just think about this. BlackRock, okay? I believe they're laying the ground for this Bitcoin standard or for this crypto standard, not to take over the dollar, but to coincide with the dollar, right? To be side by side as an asset, just like US treasuries, just like a lot of fixed income, you have the dollar, right? The biggest asset manager on the earth, BlackRock, they own the most assets, right? They actually helped the US during the pandemic. They participated in buying US treasuries to support the bond market, but now they're going to own a lot of Bitcoin. That's what this means. I don't think people understand this. Other than price, this is going to be a global transition. Not just the price of Bitcoin goes higher, but it's also that the biggest asset managers on earth are going to have to hold some Bitcoin. And what they're going to want to do is create a yield curve for lending and borrowing, right? Once you get that Bitcoin ETF, now you can think about a yield curve. The Bitcoin ETF also does a couple other things. They open up the gates for pension funds, for endowments, right? Which are college funds and whatever little local cities, colleges, universities, 401ks, mutual funds, hedge funds, family offices, investment banks. You open up the gates to tens, if not hundreds of trillions of dollars globally, right? And in the US. So, BlackRock is not making this move for no reason. It is coming. And if you want to look at the fine print here, right? The World Economic Forum is talking about, well, before we get to that, right? Not only just holding Bitcoin, but in general, Larry Fink talks a lot about tokenizing everything. If you've watched his interviews, he doesn't just say Bitcoin is an important asset. He says, it's important that we tokenize everything. The World Economic Forum is pro tokenization, right? All the bad guys that we hear, they're taking over, but they're pro tokenization for a reason too, because they know the global economy will collapse if they don't create more efficiencies, cheaper, faster, smarter technologies when it comes to the financial system, right? So major asset managers are also in the world pro tokenization. There's a huge growth potential. And here's what BlackRock says. The tokenization of asset classes offers the prospect of driving efficiencies in capital markets, shortening value chains, and improving costs and access to investors, right? So $867 trillion market for tokenization. That's tokenizing all assets, gold, real estate, wine, whatever it is, gold, real estate, right? Equities, what else can you tokenize? Gold, commodities, right? You could tokenize pretty much anything. And that's what they're headed for. $867 trillion market for tokenization. 97% of institutions agree that tokenization is the future. That is BNY Mellon, the Bank of BNY Mellon. And Citigroup did some research that says tokenization has an 80 times your money expected growth rate going forward, right? So this is coming. I think this is what BRICS is going to have to adopt or adapt to, is the tokenization of everything, right? CBDCs in general. The largest central bank messaging system, Swift, is experimenting with blockchain, right? They're experimenting with tokenization. As a matter of fact, they were actually successful moving assets from chain to chain, from private to public blockchains, from bank to bank. So this central bank digital currency is around the corner. It is right around the corner. And more than anything, you see these Chinese relations with the US and a lot of issues with, geopolitical relations. All these leaders are trying to do is create a deal that's going to benefit their economy to some degree. Do you think they really care about all these other, they care about the economy more than anything. They don't survive without it. And the next innovation is going to be blockchain, for their financial systems. It's going to be tokenizing everything, right? So the real question is, how else does an economy escape, right, the death cycle without investing in productive technology? Because everybody's in a debt spiral. Japan is 240% debt to GDP, meaning they have 240% of debt versus what they're producing as far as GDP. Greece 200%, Singapore 165, Italy 130, US 116. And really, US, if you take all debt, we're pretty much 200% in GDP. So this is just, another, India's even in debt 81%, right? And they hardly have any debt. They have one of the biggest economies with the lowest amount of debt. And right now, as a matter of fact, who's meeting with the Indian leaders? I believe it is Biden. He's going over there to make a deal for energy and for weapons and infrastructure, because at the end of the day, you want technology. This war is about who invests and who can produce the most with their technologies. So you need AI, you need automation, right? You need robotics, because the labor force, because the birth rate is falling around the world. The birth rate is falling. I think the US is falling at the fastest rate it has forever. And you're going to need a labor force to some degree, or else you get that wage inflation where, you have to increase wages and more inflation to get people to come to work. So electric vehicles, that's around the corner, right? That's coming. We already know that. It's big in Europe, it's big in China. The US is kind of late as a global power to EVs. And then you got full self-driving at some point. Oh my God, that's crazy. It's coming, right? It is coming no matter what. Just like the mobile wave did in the early 2000s, nobody believed in Apple, right? Just like social media exploded in 2009 when Facebook came out. These things are coming. Energy storage, right? Which will be bigger than the EV business when it comes to Tesla. But energy storage is, you're driving the cost of energy to near zero. Everybody wants that. The Saudis are investing in infrastructure for that to happen, solar, nuclear, whatever it is, because that's how you're going to preserve your economy. That's how you're going to, become a real powerhouse in the global economy, or else you fall apart. So we're at a big transition here. We're no longer in globalization where everybody's, doing the same things. Everybody wants to onshore their own technology, make sure their supply chains are in house instead of relying on other countries who can weaponize that against you. XYZ, we've all heard that, right? Blockchain smart contracts, right? Why is that big? Because blockchain, more than anything, stable coins, right? All these things, tokenization, that's about making financial transactions, global trade cheaper, faster, more efficient. Because it's a tricky business right now. It's expensive to send money. It's way too expensive to send money globally. It's too expensive. It's untransparent. You never know if you're going to get screwed over. You can't really see it. You got to trust the entity. So tokenization is going to be very important. And when it's on a blockchain, everybody can see it. Nobody's fooled. Not only that, but central banks now can easily receive the capital or the assets they need to back the collateral in real time, instead of waiting a couple days and being unsure. The rails are a lot faster. 5G, 6G chips. We already know the chips revolution is happening now. So point being, BRICS is not going to destroy the US dollar. With the only way to really go after the dollar is to have a better technological system and attract investment capital to your economy, which is going to have to do with AI and all that other stuff, right? So right now, the global economy is starting to ease. And this is sort of transitioning here, kind of proving, hey, BRICS. I don't know if there's any comments on there, but BRICS is doing nothing. When you hear that, when like the real main point here, when you hear, oh, BRICS is going to take over the dollar, people don't know what they're talking about. They owe dollar debts. They would have to make the dollar go much higher by defaulting on their dollar debts. And that's just not going to happen. They're not going to do it. There has to be a transition. That's probably what the World Economic Forum is trying to do, is transition, tokenize everything, create central bank digital basket currencies, and make it a smoother ride. So that's where we're headed, but the dollar's going nowhere, right? You're going to have a digital dollar pretty soon. Now, yeah, no problem. TA keeps me level head 100%. So again, looking at it, now transition a little bit to markets, right? Today, there's not a whole lot of macroeconomic data right now. And really the market is looking at the inflation coming in on Wednesday. I believe it's Wednesday, right? The 13th. I said 14th yesterday. It's the 14th. So really, you got 2 more days. Monday, Tuesday. That's the market's going to trade off technicals Monday, Tuesday, and then we jump straight into the inflation rate. After that, you have 7 more days, or really 8 more days, and then you get 7 more days. Yeah, because 13th, and then you get the 20th. You get the rate, the Fed rate decision. So that's what the market's looking at. Now, I want to just show this really quick. The percent of central banks that was a rate hike is rolling over, right? So the percent of central banks whose last move was a rate hike is now coming down. The percent is rolling over. The charts are on YouTube if you don't see it, right? So what does that tell us? That tells us that we're starting to ease now, right? The global economic the global economic rate cycle is starting to ease. It's starting to roll over, and it's going to come down to the Fed because it is the biggest central bank. But I think this is the pause, right? And a lot of people are thinking this is going to be bad, but this is going to really set off markets even higher. I think we're going higher from here. September is going to end positive from the macro setup. Oh yeah, oil's going higher, great, but housing prices are still falling. We just got rents today. Rents in metropolitan areas like Phoenix, maybe not the Midwest, but bigger cities, rents are decelerating. You're getting that global movement from housing, right, or from single family homes to rent prices. Rent prices are collapsing. They're going negative. They're not just disinflation, they're going deflationary. And so there's going to be a huge migration or secular move into renting. You'll probably be able to own your apartment also going forward to some degree, and it'll be cheaper financing. They're just waiting for rates to come down. But anyways, renting is big, right? Now, the amount of central banks whose last move was a rate cut is going up. So now we're getting, you could see the cycle on the charts. Once you start cycling up, that's it. You start cutting rates, right? We're headed into the rate cuts into the 2024. There's going to be more rate cuts. Inflation is on the core side is falling. Rents, shelter, it's in the pipeline. That's going to make its way through, and all of a sudden the Fed can cut more. Oil is the only thing in the way. And yes, it is bearish. If it accelerates significantly, it is going to be bearish. But what is the catalyst to make oil go higher? There's not really a catalyst. Global economies are slow right now, right? They're starting to cut rates for a reason. They're weak, right? They are weak. Demand is weak. Russia, BRICS in general, well, it's not really BRICS, but Russia, the Saudis, they're cutting production because demand is not that strong, right? Now, all you need is and this also accelerates the EV revolution. Why? Because if prices keep going higher, well, it's going to push people towards using, not traveling as much, right? The Zooms of the world, the virtual meets are going to increase, right? You're going to see that demographic start to increase and say, well, let's just meet up online. I said that we talked about this a while back, but this will continue while these oil prices go up. These problems will be solved. So electric vehicles becoming way cheaper, not just owning the vehicle, but the cost to travel way cheaper, right? Way cheaper and faster and more efficient to actually use virtual meetups for businesses versus traveling, which usually has to do with oil. So that's going to change. And what we're seeing here is that if you look at the 4 major central bank supply of money growth supply, M2, that's been moving up for a while. And once you move up, that's it. You're in the cycle. So this is the turning of the cycle. I know it's like, oh, there's all this fear in the market. Look, the market, there's a lot of upside because there's still cash on the sideline. People are still fearful. First, it was inflation's going higher at the beginning of the year. It didn't happen. And because it didn't happen, what happened? You got people having to go positive. Okay, inflation is no longer going higher. Now they're trying to say it. But I mean, come on. They said inflation was going higher. It just isn't going higher because they don't understand what inflation is. They look at the prices at the pump and they think that's inflation. Inflation is the rate of change, right? If you go from $10 to $11, and then from $11, that's a 10% increase, by the way. And then from $11 to $11.50, yes, the price went higher, but that is disinflationary. It didn't go up at 10% again, right? It disinflated. So that and not understanding inflation is the reason why investors or a lot of people had to capitulate because they thought inflation was going higher. And that's just not the case. And then when you look at okay, there's recession risks, right? Everybody's like, okay, we're at risk of recession. Here comes the recession. We're not seeing it, right? GDP has been revised up. Yes, jobs are coming into line. They're slowing down a little bit, but you have the infrastructure bill coming in fourth quarter. You also have, earnings are starting to be revised higher. So there is no recession risks yet. Oil is going up as a response to supply cuts, but also what does that do? It puts more earnings in producers. So there's some fault, like the financial sector is in trouble because interest rates and yields are so high, right? Yields are really high, but for other companies, they've already locked in low rates. So that's not going to be a very big issue for other countries. Let me switch these charts to let's get over to the macro chart, right? So, and then I'm going to put myself down here. Right. So this is the only concern. This is really the only concern. Is it something to be concerned? Yes. Yes. Concerned with. Yeah, because CPI is probably going to move higher. Now, here's the thing. Here's the reason why this CPI print I don't think is going to be as bad. I think it'll undershoot because really this big move in oil actually happened in July. All of August was pretty much sideways. It was sideways. There was no real increase in oil in August. It started breaking out at the end of August, but you measure inflation from the beginning month to the end of the month, so it didn't really move much, right? Um, so if you measured from the lows, yes, but inflation doesn't take the lows. It takes the beginning of the month at the end of the month. Therefore, I think inflation's actually going to come in better than expected here on Wednesday. We know shelter's coming down. We saw the jobs got revised down, right? The jobs report got revised down. I think it was 300,000 jobs from January got revised off. So the economy is not booming. It's hanging in there, right? It's cooling down, but it's starting to reaccelerate in some areas, right? And it's hard for people to wrap that in their mind. They think it's just up or down, but it's not just up or down. It's like a seesaw, right? There's big swings back and forth, and now it's starting to level off. It's starting to level off, and it's not accelerating at a fast pace. Manufacturing is starting to bottom. Services are still holding the economy together. We saw the PMIs hot, right? Prices were kind of hot, and everybody thinks that's going to transition to hotter inflation. But when it doesn't happen, you're going to get a big capitulation. So you're looking at oil here. And if it goes straight up, yes, it's going to be some concern. So once you get above like 93, 94, but for now, I don't think that's the case because before I thought, okay, if oil breaks out and core inflation keeps going up, you're going to be in trouble. But we're not seeing that. We talked about this yesterday. Core inflation is starting to fall and also the nowcasts or the forecasts for inflation in core side are coming down, right? While headline is up a little bit, and it's just up a little bit. It's not crazy, right? It's not up like tremendously. The dollar breaking out, well, that's not always negative for assets. For risk assets, it's like a beach ball. It's keeping the pressure down on risk assets. But a lot of this dollar strength is because the US economy is much stronger than the world. It is just much stronger than the rest of the world. So you could get the dollar moving sideways, and that's not really going to hurt equities that much. We're not seeing, the VIX really spike significantly. Where's the VIX at? The VIX came right back down, right? And I'm trying to signal this. Yes, there's some risks to the market. I bet you KRE is rolling over, but the VIX, the volatility of equities is just not moving. It's staying still. Keep that in mind while you take your trades, while you take your investments. Volatility on NASDAQ is not moving. Okay, the put to call ratio is still falling. There's no real risks coming into the market. The biggest one is inflation going to move up significantly next Wednesday, right? That's pretty much your biggest risk. And guess what? The projections for a rate hike are still at 7%. Okay, they're still at 7%. So you're not getting any meaningful movement on inflation expectations or the Fed hiking rates. It's just not happening because we know the economy is slowing, right? It is slowing. It has these little spurts because of investment, and then but it's not enough to get inflation up. The only way to get inflation up is if your economy is absolutely, growing at a fast pace. So that's my stance. I don't think inflation is going to be strong. Probably because we're in September, October, probably by November, we really get a really good inflation print where it really starts to show things are slowing down. Then they're going to say, oh, well, we're going into a recession. Maybe in 2024, maybe those lag effects come through. But as of now, it doesn't look like that's going to be the case. Okay. That's nothing. So, yeah, I mean, the story is, I mean, we could look at the technicals, but the story right now, BRICS was just something I wanted to talk about. But the story right now is, hey, inflation comes in on Tuesday or on Wednesday, next Wednesday, and the market is still holding in here. From a technical basis, you can see that the market is still holding what 444 is the level. We've been talking about the 444 level, still hanging in there. Still hanging in there. Can it slip? Possibly, but you got 2 days. You got Monday and Tuesday for the market to slip below that level. If it doesn't, and you get a better than expected inflation print or right in line, I think we're going to just keep grinding up. NASDAQ still in an uptrend, right? S&P still in the uptrend above the moving averages. We're struggling at the 50-day moving average. So let me throw that on there. We're struggling to get above that. So that's something bearish, but I think it's just going to take, like I said, the inflation rate to come in for the market to digest what's actually going on there. And then you have the Fed come in the next week, and I'm guessing they're definitely going to pause by that time, right? They're going to pause. Oh, KRE. So here's KRE is something we need to look out for, because KRE is going to trigger the Fed to is probably going to trigger the Fed if it does roll over to do something, or the FDIC, like we talked about before. We'll see if it catches a bid. I don't know what's going to happen there, right? But if it rolls over, then I don't think the market really reacts, because we know the Fed Bank Term Funding Program is more liquidity to come into the banking sector. So you need a real surprise there. 10-year yields, 2-year yields, short-term yields, they're still consolidating at the highs. And really, I think what's going on there is, like we've been talking about, the reverse repo liquidity is still moving up. And this is probably one of the main factors that other people don't look at for why I'm still bullish on the market, because you're getting liquidity come into capital markets, right? So you want to hold cash and gain your 5%, great. Money market funds are going to say, well, I'm going to take the S&P if the macro improves, if inflation's coming down, if earnings are being revised up, they're going to take S&P bets, and they're going to take their liquidity out of the reverse repo facility and start taking bets on risk, right? That's pretty much what we're seeing here. Here's your wedge pattern, forming an uptrend, forming a small little uptrend on a wedge pattern. So we're getting that come in to play. See if I missed anything here. I don't think so. No. All right. So yeah, that's what we're looking at, right? That's kind of what it's looking at. If you look at the Dow, same thing. That reverse repo liquidity has been the story to lift capital markets. I think we're going higher, especially, like I said, if inflation comes out lower, right? So what are some of the chances inflation comes out lower? Also, we had some Fed speak. We see CFT positioning. We had some Fed speak. Consumer credit report. We'll look at that. I know everybody's signaling the consumer is so weak, but credit, like debt levels, are not as important as the debt levels are not as important in general. They always go up. The market always goes up. Okay, the market should be going down because debt's at an all-time high. That's not how it works. It's disposable income to debt. That's how much people have to pay off the debt. That matters the most, and they have enough cash to pay their debts. Oh, the savings rate is coming down. Well, I mean, the savings rate is relative to their income. So they might be saving less in this month or the next month, but if their incomes are still, wage growth is outpacing inflation, and their income, they still have a job, 2 jobs, or whatever it is. Well, they don't need to save a lot. They can be investing that money. And we're seeing huge inflows into the equity market, huge inflows into the equity market, huge inflows to the bond market. Even though the bond market's selling off, that's because the Fed in China is no longer buying treasuries, and neither is Japan. But U.S. retailers are. I'm sorry, retail investors are, right? Pension funds, they're still buying. They're still buying that. So we see the inflows there. What do you think of high volatility leading into OPEX? What did you think of high volatility leading into OPEX? I don't really know what you mean by that. OPEX or OPEC? Like an OPEC meeting? You're talking about OPEC meeting? And high volatility, what do you mean by high volatility? Sinister. And then I think this is the buying. This is the buy area for Bitcoin, especially with this liquidity coming in. I mean, you have a lot of support. at these levels, a lot of support at these levels. And I think really people are underestimating what the ETF is going to mean going forward. Options expiry. Oh, okay. Going into options expiry. Is that what you're saying? I don't think it's a big deal. Honestly, I don't think it's gonna make. You might see a little shift, but so many people are positioned still into cash. That's what's keeping the volatility from really spiking. People are on the sideline. How many of you guys are scared to invest? I know so many people who are scared to put money in because they're like, "Hey, well, are you sure we're at the bottom? Are you sure?" And I'm not saying I know if we're at the bottom. I'm just pointing out the fact that when you have a lot of cash on the sideline, you suppress selling pressure. Nobody's selling because they're underweight they're underweight stocks, they're underweight risk. So if that's the case, you're not going to get selling pressure. Nobody's going to sell at this level. They're going to sell. Only way they sell is if they see an imminent threat, right? Oh, there's a geopolitical threat. Yeah, they might sell on that, right? An imminent threat. Other than that, no expiry, options expiry is not going to make a big deal unless you're at all-time highs and everybody's over invested into the markets. That might make a deal, but right now there's a lot of under investment more than anything, right? There's a lot of under investment. So that's what I would say. Speaking on that fact, Tesla's holding the 241 level. It's now forming a wedge within this wedge. It is now forming a wedge within the wedge. Okay. So that's looking pretty solid there. Yeah, you're welcome. It's a pretty boring market right now. The dollar just keeps, the dollar is a risk, but like I said before, the dollar going higher is really crushing, is really going to crush other economies. It's going to force them to have to do something, to have to print, to make a deal with the U.S. For investment, uh, anything like that. That's likely the outcome for the dollar, for the globally. Is it even manageable? Very thin line between destruction and survival. Also, there's some charts from Bespoke. Where's that chart on Bespoke? It was showing that, the market is just really cooling off. Here it is. Price and trading range. The 10-day advanced decline line sort of peaked when we peaked, and now it's coming back down. So we're just in a trend. Really, this is accumulation phase. I think there's a lot of accumulation going on right now. Based what I'm seeing, no threat. There's really no big threats. It's a boring phase, and people are scared. Oh my God, are we gonna get the rug pulled with under us? Right? What are the biggest threats? I mean, that oil, somehow demand comes out of nowhere and oil goes higher, and they keep cutting supply. But every time they cut supply, they lose market share to a non-OPEC. So in the next cycle, they're cutting their chances of profitability, basically. They are cutting their chances of profitability. And then, those price cuts for Tesla, here's what that's going to do for Tesla. I know we talked about those price cuts, and some people think it's bearish, but they're taking over, they are gaining more market share. So as just to think about this, what is this? The Toyota, is this Toyota? The Taycan, the Toyota Taycan. Yeah, this is the best. I don't even know what it is. Anyways, if you look at the Model S Plaid versus this is Porsche, my bad. The Porsche Taycan, the Model S got cut. Right now it's at 89,000, and the Porsche Taycan's about 90,000, pretty much the same price, right? Here's the difference when it comes to price cuts and performance. 0 to 60 miles an hour, right? 0 to 60, the Taycan does 5.1 seconds. The Model S does 2 seconds flat. 0 to 60. So much quicker acceleration, faster. Oh, I don't care about speed. Well, most people do. They just don't say it, or they do. And they're like, okay, that's a much faster vehicle. How about the range, right? And this is the other EV from Porsche. The range, 225 miles for the Taycan. For the Model S, 396, pushing 400-mile range. Not even close. That's probably way more important to most people is I want the range to be longer, right? The Taycan is rear wheel drive, and the Plaid Model S is all-wheel drive. So they're about the same price right now, even though the Model S is extremely, extremely more, has a better performance and fundamentals, right? Can go farther, performance in general. So I, it's really not close. It is really not close there. And as that continues, it's just going to bring more demand to the Tesla model. More demand. Um, let's see, Zoom. I think Zoom is also set to move higher too, because that secular trend of adoption for, I believe this is we're headed into business season. That's what I heard they called it, business season, where corporates have to do a lot of, business communications, and Zoom is still the best platform for that. They also don't want their data stored at Google, right? At these other Google and Microsoft. They don't want their data stored there. They don't really trust it because they're competing. So Zoom becomes that one off. Well, they're kind of agnostic. They don't really compete with us. It doesn't matter if they have our data. So I like Zoom as a setup on a bigger trend, right? One of those Kathy Wood innovation stocks has a good balance sheet. And I'll talk a little more about Zoom going forward. I'll bring out some fundamentals. I'll do a whole slide on that, just not today. Today it's just debunking bricks taking over the dollar. Oh, Apple. That was the other news. Apple. I think Apple's a buying opportunity for most people, right? Looking at Apple, AAPL. I think it's just another buying opportunity. It's forming this wedge. I remember when it did a wedge last time. Every time you get Apple really retraced, it's always a big buying opportunity. People want to own it. iPhone sales, blah, 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 whatever. Like, people are going to invest in the future, not really the present. They're looking at interest rates in 2024, 25 easing, and they're looking at China stimulate their markets. They're also looking at how Apple's coming out with their new iPhone. They're coming out with new technology, right? New ways. Their service business is growing, and China's not going to really mess with. They're not going to go any further than the government ban on Apple devices, because Apple in their country actually helps them grow revenue. It grows their GDP, right? They grows their GDP, so they're not going to get rid of Apple altogether. It could be just a threat too, or a negotiation tactic. It could be that. SPX as well, please. Oh, SPX. Yeah, we just went over SPX. SPX is holding. So SPX is different than SPY, but it is holding the major. It is holding a support zone, which I call 4,400. 4,400 is the big zone. I guess SPX is a little different. I would say, yeah, 4,400 to 4420, maybe 4420. 4420 and 4450. Those are your two levels. 4450 is more bullish. 4420 is like, okay, mild, right? Mild, pretty mild. And that's because 4450 is the Jackson Hole sell off. Before Jackson Hole or right after, before Jackson Hole, yeah. And that's where we broke above. So somewhere in the 44 to 40, yeah, it's pretty much the 44 to 4450 range for SPX is your support. I'm pretty sure it's also failing to hold the EMA. Yeah, it's failing to hold the EMA also. So SPX is, but it's in the uptrend, right? We're still in a small little uptrend for SPX. Yeah, you could pull that wedge. You could just call it a wedge there if you wanted to, but you have a little wedge going there. And maybe it does break to the downside, but it really depends on the inflation numbers coming out. Everybody's expecting inflation to go up a little bit. I think actually the numbers are better. If any time they're going to get bad numbers, it might be in October. And remember, after September, the Fed skips the October meeting and doesn't come back till November, which means even if inflation goes up in October on the energy side, because we know oil prices are up right now, even if it does go up, they're not making a decision till the next meeting, which would be November. And you would have to guess that oil just goes up the whole year to really get bearish, right? You really need oil to go up the whole year. And really, oil going up is one component. 57% of the CPI component is shelter and vehicles. And those are coming down, right? I think we got today vehicle sales, right? We didn't really talk about too much macro data, but vehicle sales were down 7%, I believe. So that CPI, yeah, again, yes, oil's a threat, but it's like we're basically just putting alert for oil, alert, alert. But it's not like there's no imminent macro pushing oil higher, right? There's nothing in the backlog that says oil should keep going up. Nothing really says that. The rest of the commodities are really weak, and so I don't think the oil increase is that big of a negative. Now, if something were to change, then yeah, maybe it does. So, anyways, September, what are we looking at here? Okay, there we go. Used car prices down -7%. They're still in used car prices are they're in they're negative territory. So they're in deflation, right? They're showing deflationary pressures for used car prices. Start trying to rebound year over year. What is Jackson Hole? Jackson Hole, Mr. Cavity Podcast. Jackson Hole was the annual Fed meeting. It's the annual Fed meeting. It was, I think, a couple weeks ago now. It was like 2 Fridays ago. Maybe it was 3. I'm not sure, but Jackson Hole, it was 2 or 3 Fridays ago. Jackson Hole is the annual symposium where all the Fed members, everybody meets in Wyoming, I believe, and they go over Fed policy. They talk about what they're looking forward to. It's just laying the expectations going forward for the economy. And Powell was really, I would say that Powell was pretty more dovish than he was. I know he tried to come off hawkish, but they just repeat the statements. We're gonna 2% is our target, but that's not what's important for equities, right? What's important for equities is for equities are you seeing progress? Are you optimistic going forward? Are you seeing progress? And what they said is yes, the housing market is rolling over, but any risks, the two big risks they did cite were if we see housing prices start to reaccelerate to the upside, then we may hike rates again. But also, if we see the jobs market, the labor market come out of balance, which means wage growth spiral, or wage inflation goes up, then that would give them cause or probable cause to hike rates. But the data that we've gotten so far says the opposite. Rent growth today, right? Today, rents are collapsing. The data is collapsing. We got the jobs report last Friday, collapsing. Jobs are still falling. There is a revision on it. People are coming into the labor force, which is good. You increase productivity. At the same time, I believe who was it? McDonald's today? It was McDonald's. There was a couple restaurants who are actually able to lower their wages. They're actually cutting their wages because they said we no longer need to compete. So I think the market is basically digesting that data and looking at used car prices and expecting, okay, well, we're going to expect inflation to move up on the headline, but shelter should keep coming down, right? And that's purely because of oil prices. And what that does is it turns off the consumer. I have to spend more on gas. Well, it turns them off from spending on other extravagant stuff, which brings down inflation. So overall, I think the macro trend for inflation just keeps going lower. And you hear all the fear mongering out there. Inflation is going right back up to the 1970s. It's not happening. There's nothing that suggests that. And I'm making a bet on that. It's just we're seeing negative inflation in China and the EU. Like their inflation rate is negative. It's in the negatives. And I think the US goes negative at some point. We're still cooling, right? The economy is still cooling. Oh, we got some Tom Lee stuff here. What does he say? The Mannheim used car index for August finally released this AM index 20 months, negative 18% from December 2021 peak. So used cars from peak are down 21%. Used car prices, inflation are down 21% from peak. There should be more. Okay, there's a 30-year trend. They should be coming down more, he says. And these aren't the actual prices. This is the inflation. We're talking about inflation here, not actual price. Meaning from the peak in February, inflation is going up. As actually, it's not going up. But it's negative, so it's coming down, right? Inflation is coming down. If it was up, if you went from 10% to 5%, you get disinflation. But negative 29% means those prices are actually falling. It just takes time for certain things to factor into the market. What was this? Oh, okay, yeah, Tesla. Okay, look at Tesla risks. This is going to be. I want to go over this too. Tesla risks. What else did we see here? Yeah, that's what Jackson Hole is. So, and I'm talking about Tesla because it's going to have a monster run again pretty soon here. My expectation it has another monster run because the catalysts here, the M3 refresh, new demand, right? Very nice vehicle. It's looking better. You get the refresh on the Model 3. Put up the Tesla charts here. Tesla is also wedging. It could come back down and retest this trend for sure. Let me see. We're looking at the daily chart. So it could come back down and retest the trend. Usually you get this big capitulation to the downside. It'll wedge, and then you're like, all right, where's the breakout? Boom, one downside move, and then it just rockets higher. I've seen Tesla price more than any other any other asset. And usually it wedges, it breaks down for a day. And what you do is on the breakdown, you're watching the buyers if they step in sharply, and that usually marks the bottom for Tesla on the intraday. I'm looking for that going into, this next inflation reading and going into the Fed meeting. I'm looking for Tesla to really break down first and then break higher. That's the better entry given my position. I'm already positioned in it. So I don't really need to buy the breakout. I'd rather buy some weakness and see capitulation back to the upside. Tesla to 1,000. Heck yeah. 100%. It's going to, I think it goes to 1,000. The question is, how fast does it get there, right? So Model 3 refresh, that is new demand. Cybertruck launch, new total addressable market, right? Total addressable market is one of my fundamental principles, which I will be releasing probably a little later on, a couple months. I'm working on fundamental analysis that is easily digestible for people so they can use it. It'll be obviously, in the website. It'll just be something you can refer to, or maybe I'll turn it into a book. I don't know what the easiest, way to do that is, but either way, total addressable market. Cybertruck creates a new addressable market, right? So that's new revenue streams for Tesla. That's big, right? And then you got full self-driving L4 autonomy licensing deal, which people are going to say, oh, that's magic. Well, hey, that's where the world's headed. If any inch of evidence comes out towards that, it's going to take off. I think that's what really sets off price. If nothing else, if the overall market declines and you get somebody saying, okay, we are now licensing full self-driving because it's at a very mature point, we want to get in early, the price is going to take off. That's been the biggest catalyst for the last 3 years, and it hasn't happened yet, and we're getting closer and closer to that point, right? What is this? Volumes estimates too low, halo effect from new products, forward-looking volumes. Oh, estimates on volume production the estimates are very low probably because of China. So if you definitely get a outsized and we're gonna get the Tesla deliveries I don't want to say pretty soon. Usually, what is it, like a week before earnings? Maybe early October or September, late September, we get the delivery numbers. That's always a catalyst also for Tesla. 25 to 30K next generation vehicle, a new total addressable market. So you have two new vehicles, Cybertruck, and you get this new gen 25K to 30K, basically a cheaper vehicle, trying to match like the Toyota Camrys, right? A cheaper vehicle for people, the Kias, and that's another total addressable market. Now, the biggest risks for Tesla going forward, right? Further price cuts, negative revisions. So further price cuts, which they've been doing, but on a smaller. They've been doing a lot of price cuts, so that is negative for the margins. So that's a negative. That's a negative for margins. But you just got to factor that in. New competitors for EVs. Doubt it. MY ubiquity. I don't even know what he means by that. Model Y ubiquity. I think something about, I actually don't know what that means. No advertising or PR. Oh, yeah, because they haven't been pouring into advertising at all. Autopilot, regulatory risks. Yeah, if the regulation comes out and says, heck no, we're not doing this anytime soon, that's a big risk. Elon tries to combine all his companies under an umbrella. Yeah, a lot of people guessing here. We really don't know what he's going to do. But I still think those are the catalysts are much stronger. And now if you get the S&P holding the level, then you really have a strong catalyst there because it'll lift with the overall market regardless of what's going on, right? Very how do I say this? It's very, I mean, it's Friday. There's not too much coming out. tomorrow I will have I'll go through the newsletter. I'll send out the newsletter. And I think it's going to start to change a little bit because the market is starting to change. It's starting to see price in different streams because earnings are coming up. So fundamentals are going to be big because they're starting to be revised up. The financial sector is probably the weakest sector going into earnings, which is going to be the first sector to report, the first industry sector to report going into earnings. So the market might have a negative response to that initially, or it could say, oh, these are the bottom of financials, go higher, right? We don't know. So we got to just watch the price action there. But just know financials should come in weak. Tech is set to outperform. Energy should be outperforming. And yeah, and that's it. We're just waiting for the dollar to slow down and move sideways a little bit. Bond yields, where are they headed with this weak economy? As soon as bond yields start to break down, like the 10-year, once you get the 10-year roll over, is it showing bearish divergence? I wouldn't say that, not yet. And I don't even know if divergence works there. But once it rolls over, that's it. That's it. So any questions going forward for the weekend? I think on Monday, I'm going to do Monday, I'll be doing a top 10 catalyst for Chainlink or Ethereum or Bitcoin, or maybe I'll combine all of them. Might combine all of them. And then Zoom, Chainlink or Zoom, one of those. Zoom has some really good fundamentals out there. Let's see, what do we got? So yeah, that's what we're looking at. There's a lot of catalysts for crypto. Remember, crypto is growing at the fastest pace of any other asset class by far. The wallet addresses are booming, especially in other countries. We always think about the U.S., but they're moving pretty fast in other countries. So I expect that to continue. And it's just a boring month. Anyways, that's all I have. There's not a whole lot of macro data this week. Like I said, it's all about inflation. And I think I'm going to leave it with that. We're expected to come in at 3 point. Let me double check that for inflation. Those car prices declining is really good for inflation though. Oh, tonight we get China's inflation rate. If it's still negative, they're going to keep printing. They should keep printing. India's inflation rate on Tuesday. Don't really care about that. Core inflation month on month is going to be hot. Actually, no, do we have estimates in yet for August? Oh, we do. Okay, good. So we do have some estimates. Let me throw this on the screen. I was wondering if we're going to have estimates yet. We must have put this consensus in just recently. All right, so this is core inflation. Core inflation, the consensus is 0.2%. So that's going to be important, right? Does it come in below or above consensus? Anything above is going to be bearish, pretty even. Anything right on target, I believe, is going to be neutral to bullish. I think right on target, neutral to bullish. Anything above, would you say yes? Anything above would be, below is going to be very, very bullish, right? On the month-on-month reading, it's set to come in at 0.2% for the core. Now the inflation rate is set to go higher because the inflation rate, the headline takes in account energy, right? Oil prices, it takes that in account. It's expected to come in at 0.6. So that would be the highest reading all year, all the way back to 2024. So the fact that the expectation is so high, that actually sets you up for a big beat. If it doesn't come in that high, that actually does set up for a big beat. Like, is it really going to triple? 0.2 to 0.6, right? I like that though. I'm glad the consensus is so high, because that tells you that kind of means that there's a real pressure on equities right now. There's a real downwards pressure on equities because of that expectation. If it comes in better than expected, boom, goes higher. Comes in line, still bearish, or still neutral. If it comes in higher, yes, that might be pretty bearish. Now for the year on year, we finally got that consensus coming in. Consensus is at 3.6%. So that would mean this would be the second month in a row that the headline inflation goes up in August. For August, I think there's a chance it doesn't go up that high, just because August was kind of flat for energy, and I also think August, when it comes to spending, is a little lower. Shelter still falling. Used car prices, we just got them, are falling, so that it could be lower than 3.6. That'd be bullish, right? I kind of like these high revisions. On the core side, this is going to be the key component. It's set to come in at 4.3. Now that's a really good estimate. That's a pretty big drop. Wow, that's a pretty big drop, which makes it hard to beat also. So 4.7 we're at right now to 4.3. And this is going to factor into the Fed's PCE data on at the end of the month, September, at the end of the month in September. That's going to factor into this data. Usually this comes out first, and then you get PCE at the end. So $30 per egg. What? So anyways, this is a good setup. I like this. This is optimistic for inflation. I just think it keeps beating. My guess right now is, looking at these inflation numbers, I think they're going to be good. I think they're going to be solid, because core, everything else is pretty much falling. It's just energy prices for oil, right? And oil's not at 100. It's not spiking to the end of the world. Like, it's not insanely spiking, bro. It's in a risk off area, right? This is on a risk off area. Yields are still high. The dollar, you get those other effects where the dollar's up a little bit. For the most part, that's what we're looking at. Inflation coming in next week. There's really not other important data. So I'll probably be setting up the expectation for the market, how it should respond going forward. Thanks for appreciate the likes, TLA B22. Hey, I appreciate you guys coming on. Big man's coming. And do you guys have anything you want me to answer? Any TA, any questions before we sign out at the end of the week? Any questions, anything I missed that you want me to go over? Don't be shy, unless you're just listening in. But I have a pretty good grasp on what the hell is about to happen. I'm pretty sure I have a pretty good grasp on what is going to happen, especially with those estimates, right? Especially with those estimates. There's people in cash. They are going to FOMO in. They're just waiting for the Fed to pause the inflation data to come in weaker than expected. What's your outlook on SPX on Monday? All right, let me I'm going to close you guys out on YouTube. I'll catch you tomorrow.